Alright, cool. What's going on, people? Today we're going to go ahead and cover my GU trade. Okay, I'm not even sure what I'm going to title this video, but today was, well, yesterday, it was an exhausting day. Okay, I want to go over a couple things that I didn't do too well as well. I think you guys can really understand my exact thought process going into this. If you are following along with the weekly outlooks, I called the fact that I was going to look for sales on a Tuesday already going into this. Okay, also, as I always just show you guys, I literally went ahead step by step by step inside of my sort of Discord channel, and I've gone ahead and mentioned every single thing I was looking at. So you can literally go ahead. This is posted in the Discord and in the Telegram as in like a little video. So you can go ahead and check that out. I don't know if this is even going to appear. Yeah, appear on the screen. Here's also the screenshot of the trade that I did take. Okay. So DXY, right? If we go ahead and we do a little top down monthly, and I'm just going to brush over this because I've already actually done this, but monthly IFEG got tapped. Weekly SIBI was being respected, potentially looking at a bearish week to follow. I essentially said that once we got this order block formation, which we did via Monday's close, then I would look to be a seller on Tuesday. Okay, so initially, if we just go over to Euro, okay, and I'm going to actually show you all the daily cycles I used and what my thinking was along each time period. So what did we do at the start of the day? Well, we had this, and Euro is basically just the reverse of this. Yes, it's the same, but we have really clean equal highs targets, or we had two clean equal highs targets. Specifically, we wanted this previous day's high to get met. So price started off by rallying lower, which is of course perfect when it comes to daily power of three. Price went ahead and tapped this daily immediate rebalance and then started pushing away. So that actually went ahead and happened during Asia. Now, I really wanted to set a limit the night before. I was confident in the area that I thought price was going to react from, which was the daily immediate rebalance. I wanted to play an entry here, and then I wanted to actually go ahead and build my position out as price continued to the upside. That was my original game plan. Now, for me to do that, I have to stay up. I mean, it's not that late, but I had to stay up past 11 to do that. But I wanted to be fresh in the morning. Okay, so I just said to myself, cool, I'm not going to set the limit. And then I'm just going to play price in the morning. So I ended up regretting that decision, obviously. So this is Asia, this is London, yeah? So what Asia ended up doing was going ahead, sweeping out liquidity into the daily immediate rebalance, and then forming a hourly CSD, yeah? So once we got that hourly CSD, it's pretty much set in stone, for me at least, okay, that I'm going to expect this low to be protected, meaning we shouldn't go ahead and sweep this low now, and that London session is going to push higher. And this is what I call an Asia low of day cycle, yeah? So I went ahead and entered in and around, it was a roughly around Asia high, with a stop around the bodies, I think, of the hourly breaker, roughly, was what I was looking at, with the target of this high. So my first position was something like this, roughly. It wasn't the greatest entry in the world. If we go to this, was the bodies, it might have been a bit higher, a bit lower, something like this. 2R to the high, that's what I was targeting. Now, we were approaching the end of London, and typically I'm a session trader, so when we approach the end of London, I won't give the exact time periods, but I typically look to section off or get out, and then look to play the following session, right? It is a little bit discretionary, and I feel with exits it can be, yeah. So in my brain, okay, when we started off the 9 o'clock candle, we actually formed with no wick. And if you guys remember or have watched my previous videos about the idea that if we form no wick, there's a 95% chance that we will go ahead and form a wick on that candle. Essentially, my game plan was to take the profit, and it wasn't a lot. It was like a 1 point something R. Typically, I don't even like to take anything under 2R, but a clean conviction in the fact that when we go ahead and take out 8 to 9 o'clock's high, I'm just going to go ahead and take it off. Okay, and then if we get a retracement during New York, I'll just recollect my position. And essentially, I'll be profiting twice on the same move. That was what my game plan was. Now, as you can see, we literally started off the 9 o'clock candle and we just rinsed lower. We didn't even go above this. So essentially, my position here got broken even. Okay, which was okay. It wasn't majorly frustrated. I thought, cool. I was very blessed to have a trade that pretty much just ran straight into profit. I mean, it did run against me. It didn't really run against me, actually. It was more around here, to be honest. The entry was a bit poor on mine. Something like this. So I was like, cool. I've had a nice trade. It ran higher. I was at break even. I wanted to manage my position because I understand that New York can retrace, right? I wasn't expecting a retracement this deep, but I was expecting some sort of retracement to potentially go higher. Okay. So I've thought, cool. I'm break even. That's completely fine, right? And this trade was taken around 6:30 UK time or BST. So you can imagine I've literally been in a trade, or yesterday I'd been in a trade from pretty much 6:30 all the way to 8 o'clock at night. So it was a tiring day. So hourly, I'm like, cool. This is the protected low, okay? And I'm going to go ahead and try and build out a position in and around this breaker level, okay? So I've gone ahead and said to myself, cool, I still believe in this bias, and this is where the conviction in the bias is so important, okay? And this is a really bad habit that I used to have when I first was just trading daily bias, is if we ran against my bias, or if we had like a deep retracements, for example, a lot of the time I would end up buckling and I would not commit to the bias. I'd start just playing devil's advocate. I'd say, yeah, you know what? We've had strong 4-hour bearish order flow. Maybe I'd start saying, yeah, there's SMT here with DXY. I would talk myself out of the fact that I wanted to see a strong bullish daily candle. That is one of the worst things that you can do. If you're doing that, then you really need to journal through that and understand that, look, any deep retracement here is fine. Okay, even for me, right? In my journal, typically I struggle to trade deep retracements. When we retrace deeply, I've written in my journal, and this is the importance of having a journal, is I will end up buckling on the bias, and I'll say, you know what, I don't like it. Maybe we're just failure swinging high and low, and a lot of the times it will lead to me making poor decisions. So I'm like, cool, we're doing a deep retracement here. I'm going to say to myself, cool, I'm happy with that. I'm fine with that. There's no issue with that because, okay, I'm looking to be bullish, yeah? So New York comes in, okay, and I have a NY reversal cycle, right, which is basically a sweep of either London or Asia, and then a push to the upside, which is essentially this, yeah? So I ended up trying to build a position, which basically means I wanted to play sort of the higher time frame tag of this breaker. And then my idea is that once we react from this level, we go ahead, we displace higher, and I will reduce my stop on this initial higher time frame play position and then add to the position. Okay, so for example, let's say, I don't know, you play 50% of this breaker. I'll tell you what I did in a minute. But let's say, I don't know, we play 50% of the breaker. SL's at this low. After we get this strong hourly candle closure, then I reduce the SL to a reasonable area, and then I add to that position. So to make this up to 1%, I'll then go ahead and add the remaining percentage on. So I ended up playing, or trying to place breaker at 0.5% risk. Normally with these building out positions, I don't go full in on the risk. I'm just trying to get basically the best fill price on the daily candle. So I attempted that. My stop was I wouldn't even say it's too aggressive. It's permissible, but this retracement was just incredibly deep. So I ended up taking a minus 0.5 R on the day. So I've taken one break even. This is the mindset you want to think about. I've taken one break even, okay, and then I've taken half a loss or half an R loss on a potential building out style position. Now again, this is something I noticed with my journal, and this is why it's so important to journal, is during this trade, right, we stalled here during the middle of New York from 1:15 all the way till about 2:45. And I know in my journal that when we get this sort of period of consolidation, in a period where I think there should be high volatility, I can sometimes switch off. Okay, so I can potentially just say, you know what, maybe it's not going to move. And I don't really like to enter. That's another thing that, and again in my journal, I don't like to enter in New York close too much. It's not ideal. Even though, okay, and I guess without this information, it makes sense. But when we get NY reversal cycles, typically they can run, okay, later on in the day. So it's all permissible with regards to my rules and my strategy. It's just something I don't have like an affinity for, if that makes sense. It's not something that I prefer, right? Everyone loves the sort of shallow retracements, tap and go style trades, right? No one likes trades that are pulling deep into the range, consolidating there in a period where you're anticipating like very strong volatility. Okay, typically those are the trades that we don't like to see. Yeah, so cool. That's like my standing right now going into New York, or let's say midway through New York, and now we're entering London close. Now I notice that there's SMT here between GU and EU. Okay, so if you monitor these equal lows, we swept that out. Okay, if you look here, this low has been taken. This low has swept liquidity out, and this doesn't actually go ahead and form SMT. So we want the SMT to be, right, verified via some sort of displacement back inside the range. Okay, so GU again, just to break down the daily bias for GU, is perfect as well. This is great, right? We have the weekly FEG being filled, and we wanted to see the following weekly candle push higher. We were consolidating for a good few days, and then we got a breakout outside of the range. So this day was again very strong in terms of daily bias. So we got SMT at the low. We're inside of a 4-hour/1 hour FEG. Okay, if I just mark on this level here. Now, originally, I was waiting for Euro to sweep, to be honest, right? When we started plowing lower, I was like, cool, you know what? I'm willing to say this low might get taken out. Like I said, I don't have that affinity for deep retracements. When we retrace deeply, I start to assume that this low is going to get taken out. So I'm looking between DXY and EU, and I'm like, cool. Same thing with DXY. Would be nice to see some SMT here. Now, I've noticed the SMT with GU. However, I really prefer the SMT between DXY and EU. It's just personal preference, right? Based on experience. Doesn't mean this isn't permissible. It's just a preference. Now, it gets to the 3 o'clock candle, and I'm like, cool. We've had a strong closure back inside the range. The SMT has been verified, and I'm saying to myself, you know what? This is just a deep retracement. Yes, I've been stopped out on my position, but this is just a deep retracement. There's nothing wrong with the deep retracement. If we go ahead on DXY as well, we were just reacting inside of this new day opening gap. So again, in terms of like what specific area we reacted in, I mean, technically you can say the breaker as well. And if I played the breaker, if price respected the breaker the same way it did on DXY, I wouldn't have been stopped out of my EU position in the first place, and I probably would have just went ahead and built on my EU position with these closures, right? Obviously, I couldn't do that. So GU, SMT, it looks better. So I've gone ahead and I've entered, which is something I do on the hourly closure. So I've gone ahead, entered here, built out, my SL wasn't as large as that. If we go on the 15-minute, we actually form a BPR here. We had the change in state delivery for me was via the inversion. Okay, the DXY had formed a breaker here as well. Or to be fair, it hadn't formed the breaker yet, but we had displacement, and then after the first 50 minutes, we had formed this breaker pretty much. So I've gone ahead. I've set my first entry. It was a bit sloppy. It was supposed to be on the hourly candles closure. It was like roughly here. And then I scaled in on the 15-minute FEG, and then I end up closing when DXY reaches target, which was this low here. Okay, obviously it looks as if I've left a shit ton on the table, which yeah, you can make the argument for, which is completely fine. I'm happy with that, right? It's cool. Yes, it's nice to see that it ran so aggressively. That's where I wanted to see price go. My original plan, to be honest, was the following day was to get in off some sort of Judas swing lower again to ride this higher. Ends up running during A. I can't really do too much about that. So the moral of the story really with this is just getting out of your own way, okay, and really just staying calm during the trading session. Like, it's easy for me to break it down here and say, oh, these are the decisions I made, blah, 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 blah. But in the moment, like, you're battling your mind. You're saying, cool, you're down X amount on the day. You've been trading since early hours of the day. Like, you get a level of fatigue coming, mental fatigue. And it's really, really, really important, number one, to be completely detached from the trades that you've taken prior. So, like, for example, I wasn't really thinking of the fact that I'd lost half an hour in the day. I was pretty content with the fact that, you know what, I've had a previous loss in the day. I've been up 1 hour, which has hit break even. I don't really mind. It's fine. I've let that go. I'm not holding on to those emotions, number one. Number two as well is when the A plus setup presents itself, okay, again, we all have cognitive biases. We all like to see SMT between certain assets, but when the setup is there, it's just important to execute the setup and go and double down on the setup in terms of if there are scaling opportunities, go for it, right? So I've noticed journaling in the past for me, if I'd come off a loss and then I go ahead and try and scale in the next trade, sometimes I will have that fear of like, oh, I've just brought my trade to break even, or I've just cut half the risk and now I have to add on another 0.5% risk to make it back up to 1%. And a lot of the time, I don't like to do that. I mean, no one likes to do that. If we're in a trade and we manage the trade, the action in adding more risk onto the trade can be uncomfortable. And I was like, cool. In this moment, again, I felt completely detached. I was really happy with adding on the risk. I thought, you know what, if I lose 1% here, it's fine. I have a sort of a max daily loss of 2%. I rarely even take 2 trades in a day anyway. I mean, technically speaking, I've taken 3 trades this day. But yeah, and this is just me being transparent, right? Today I was mentally really strong, and there can be other days where I don't want to scale in, right? But again, you have to, okay? Other days, again, like I said in my journal, I've documented the fact that I need to scale in here, and there is a level of uncomfortability behind it. But it's about pressing through that adversity and actually getting out of your own way and executing, right? So in today's example, it's great. I've ended off the day. I've technically been up a certain amount, and then I've gone from being up 1R to being down negative 0.5%, and then I've ended the day off green. Okay, and this is really what trading is about. It's the decisions. It's making the decisions, playing to your edge and your strategy. For me, like I said, all of this was beautiful. So originally, okay, and this is another thing, it's about being adaptable, because originally, right, I was really keen on saying to myself, cool, this low is going to be low of the day, right? Technically it still was low of the day, but my original game plan was just to see price run higher from here. It wasn't to see price go ahead, run lower, tap into this breaker and go higher. So it's about being flexible with the possibilities and the scenarios that can play out on price. And with enough experience, with enough chart time, you'll know what to expect essentially, or what is permissible. So with GU, I was like, cool, you know what? We've actually formed equal lows here. This isn't an Asia low of day style setup. The fact that this has got swept out, okay? And if we think about this from a market maker perspective, anyone in Asia, anyone in London would have been long and got absolutely rinsed out by this aggressive move to the downside. So if we just think about the people or the market participants operating in this environment, they've longed at support, pushed higher. Like I said, anyone in Asia, anyone in London, even including me, would have got broken even, stopped out via this aggressive move. This aggressive move has moved with speed. We've moved with displacement to the downside, sweeping out lows. So at this point, it's like a sort of a Max Payne style area where traders have been long trying to get in the market, but have been shaken out. We've then had aggressive move down, aggressive move up, right? This is that V-shaped recovery. This is typically what we like to see with regards to like a low being made. And then simply put, I've got behind the move and let it ride out. Yes, I haven't caught the majority of the move, and I'm fine with that. But I've managed to catch a piece of the pie, which is obviously what my goal and intention is. So overall, okay, I guess you could argue I've overcomplicated certain areas, but I'm just showing you sort of the in-depth thought process with regards to checklists. With regards to what my actual checklist for this trade was, it's very simple. It's, did I have a daily bias going into today? Yes, I'm looking to be bullish. Then I'm typically looking to apply one of my daily cycle frameworks. It's not necessary, but simply put, my next question to myself is, do I think the low of the day is in? And can I catch the expansion of that daily candle? Considering the fact that, is the daily candle overextended or not? So at this point in time, the daily candle hadn't overextended. If I had this, if I go and replay, it probably shows it a little bit better, because I can show you what this daily candle actually looked like. But simply put, we'd formed what I believe to be the low of the range, or low of the daily candle, right? We'd had displacement up, so I'm just looking to get on side with the rest of this expansion to go ahead and take liquidity to the upside, and that's pretty much it. Yeah. I enter a lot of the time off of hourly closures, sorry. So again, like I said, one of my main entries was this hourly closure, right, which was just back inside of the range that I was more than comfortable saying, cool, I'm comfortable thinking this is low of the day. It lines up with a cycle as well, which is nice to see, which was an NY reversal cycle. Low being made at a very important time. Displacement higher. And yeah, I've just got on the backside of that trade, and then I've looked to add to that trade as price navigates itself to the upside with a reasonable stop loss. So yeah, sorry, it's a bit of a mouthful there. If you guys did have any questions, I mean, you can feel free to ask them. If you do look in the Telegram and the Discord, I've mentioned this in sort of that Discord log. You'd have to sort of keep pausing it to see exactly what I was thinking. But yeah, that is everything. I hope this was transparent and you could really see my thought process and how I sort of recovered a bearish day, or a day that was bearish. And yeah, hopefully you enjoyed that, and I'll see you at the next one.